welcome. This is India Tonight. I'm Shabani Kharat, and joining me in the studio is my colleague Jude Sanith. And there seems to be a climb down in the West Asia conflict over the weekend. Mediators have achieved progress in efforts to get United States and Iran back to negotiations and avert an all-out war in West Asia. This pause in attacks comes after a period of rapidly escalating tensions. Now, Jude, does this seem like a breakthrough? Because, this promise and, something like this has happened on a constant basis over the past couple of months.
It can only be called Groundhog Day, Shibani, much like that Hollywood film where the protagonist keeps waking up to the same day every day. That's pretty much how this crisis has unfolded in the recent times. But with the breakthrough negotiations now underway, the Brent crude is now below $90 to the barrel, while WTI is around $83 per barrel. Falling oil prices, remember, has lifted investor sentiment, but boosted by falling crude prices, the Dow Jones Industrial Average climbed 0.8% in what must certainly come as good news to markets. The S&P 500 too was up by 0.3%, along with the Nasdaq Composite. So joining us now to discuss the latest from not just the conflict, but how markets will react is Rajiv Agarwal, Managing Partner, Doordarshi India Fund, New York, even as Ashutosh Karnataka, former Director of Gas Authority of India, also joins us on the show tonight. Rajiv, first question to you. What do you make of it? Surely there has been some to and fro in the conflict ever since it began in February. We've seen some parts of fighting followed by what can only be called a ceasefire, but an abate really to the conflict. Markets then recover, back to fighting again, and there seems to be some break as well, even as we speak, which has only thrown sentiment into, looking upwards as far as the markets are concerned. Is this likely to be what we will experience for the foreseeable future and the short term?
Yeah, good morning and good evening to our viewers in India. So I do expect that there will be these fits and starts that we will see in terms of these negotiations that has gone on since the beginning of the war. And I don't see a quick remediation just because the distrust between the two fighting parties is very high. So it will take some time, and it will take where it ultimately becomes clear which party has an upper hand. And at this point, that is not clear because Iran has found Strait of Hormuz as a good negotiating point. So it remains to be seen. I hope that gradually we move away from this tit for tat and get to a resolution, because frankly, it is good for the whole world if we get to that. But I think it will take some time before peace is finally back in the region.
Said Mr. Agarwal. Let's go over to Mr. Ashutosh Karnataka. Now, help us understand, why did the prices drop 5% when largely the traffic through the Strait of Hormuz remains restricted? It's hardly close to what it was, when the days were normal before the West Asia crisis. So that's a sharp drop in the crude prices, to the range of 5 to 7%.
Yeah, it is right. What is happening that the oil market, they are reacting to the geopolitical risk at this moment, not on the quantity of oil passing through the Hormuz. So this is the basic thing. And what is happening, the geopolitical risk premium is getting decreased. It is getting decreased. So it is the advantage. It is the advantage at this moment. And it is not that what you are saying, that when the tankers are not passing through the Strait of Hormuz, why it is not, it is somehow dealing now. The perception is that they are seeing that geopolitical risk has reduced. Therefore, the prices are coming down.
Rajiv, if I can get you back on the conversation. The fact is that, even as this conflict continues, sure, there might be some abatement to hostilities. What you are seeing as far as the geopolitical scene is concerned, is a lot of what one might say an unreliable narration, really, from the protagonists involved. There have been multiple times when one party says something and the other side does not quite agree or finds exception in the narrative being set by one side. How do investors make sense of this in terms of judging where the market could go to from here? All this while, we've been relying on news, we've been relying on updates, on wires, on what either protagonist is saying. Do you see some sense of caution among investors before making that decision, not just going by the face value of what global leaders have been saying, but actually seeing instances and incidents on the ground and taking a more informed view of the markets and decision making only after making these assessments? How do you see investor behavior changing from here?
Absolutely. I think investors have been very mindful that what is being said is not being taken at face value. It is really being looked at in terms of the actions. So I will point out a few things. If you look at the oil prices, they have not really gone too far up, even at the peak of the crisis when there was no tankers going through the Strait of Hormuz, let's say in April. At that point, almost 20% of the world's supplies were not coming into the market, and yet the market correctly predicted that there will be some sort of resolution along the way, and therefore it did not react very negatively. Even when the second set of hostilities started, we did see that the oil prices went up and the stock prices came down. But again, it has been a measured response, both on the upside as well as on the downside. And I believe it will continue till there is a permanent settlement. So I think investors really have told the people what to expect around the Strait of Hormuz and this war. And I think investors in general, not me, but the broader investor community has done a good job of assessing how this crisis will shape up and what that means for the oil.
Right. Help us understand what is the kind of pressure on the Trump administration to finally arrive upon a breakthrough and end this geopolitical crisis that has put the world, let's say, when it comes to energy security, when it comes to, the entire, volatility in stock prices and crude oil rates to a standstill, so to speak. What is the kind of pressure on the Trump administration right now?
There are a few different pressures to your question. One is clearly in the US, there is a midterm election that is coming up.
Right.
As the election comes up, you will have the people voting. And if the inflation is high, and inflation is driven much more by oil prices, and we have in the US much higher oil prices. Oil prices are up in the pump around 30% from the beginning of the war, right? And so that is pinching the pocketbooks of the consumer. So that is one pressure that Trump administration is facing, which is higher oil prices leading to higher inflation, which will lead to higher interest rate. And Trump has a stated policy of reducing interest rate, which he's not able to get to because inflation is higher. So that's one side of it. The second aspect clearly is there are various news articles talking about how much is the stockpile of the ammunition that US has, how much has been used, how much is available for the future. And so that is another pressure point, which is to understand how much should you spend on a war like this, which is really far away from the US, and is it really worth waging a big all-out fight? And then the third thing really is to figure out whether the means or the goals that Trump administration had going into it, which is Iran cannot have enriched uranium, has that already been achieved? And if it has been, at what point do you say, listen, at this point, it is time to reduce the conflict and take it now and make a peace? So I think those are the three different pressure points, I would think, because remember, Congress has never approved this particular war. And many times Trump administration has said that this is only a small skirmish and it is almost getting over. So the Congress not having approved the war is another pressure point.
Before I get you back in on the discourse, I just want to read out the 4 top updates, from the latest concerning the West Asia crisis. Number one is that there have been no strikes witnessed over the weekend. We went over that as a function of how the markets have opened in the green today. Mediators, more importantly, are getting US and Iran on the negotiating table, and they're also involving negotiators from Qatar and Pakistan as well, given that global interests are pretty much involved as far as the ongoing crisis is concerned. But more importantly, the American side is saying that Trump is giving talks some space. Now, that does not necessarily mean that we will see, or I would hope not, but at least as far as these indications are concerned, you may not see a considerable gap to the fighting or the firing, but the fact that some space is being given, and under the context of entities like Qatar and Pakistan being involved in the negotiations, where do you see crude prices going from here? Is sentiment now going to be on the fast track, given these indications are pointing to some semblance of arriving at some semblance of a peace, even if not a long-lasting permanent one? Mr. Ashutosh.
Yeah, in fact, it is a combination of what we say in negotiation, JOPA. JOPA is a zone of possible agreement. So both the parties have to agree to a set of conditions which is agreeable to both the parties. Now, what is happening that after a long negotiation with Iran, Iran is not coming in terms with the American requirement. Although they have considered there around 15 conditions. Now see, until and unless it happens, so it will be very difficult for them. And all the in between the activities which are going on, it is like going to threat and going to fatigue, then reaction, then proaction. It is part of that process. And since this process has taken time, what I feel now, they might have considered, the negotiator might have gone to US as well as to Iranian, that look, this is the condition, now we should agree to this, or we should not disagree. So until and unless the JOPA, zone of possible agreement, is formed up, this war will going to be like this only.
Right. You're saying the war is going to be like this only, but, given the public sector OMCs in India, and let's come back to India and the impact of this dip on the Indian OMCs. Now, they have absorbed massive losses, in the first quarter. Does this, Brent dip below $90 a barrel really put or push the marketing margins into the green at all in the days to come?
Yeah,
Mr. Karnataka.
It will help the Indian OMCs to at least gain some losses, because in a recent report we have seen that maybe around 70,000 crores of losses they have in totality. IOC, SPCL and BPCL they have accrued, and government is going to give them some subsidy also. So with this smoothing of the prices, definitely they will find themselves in a very comfortable position, and they'll try to recover their losses.
Right, Rajiv, if I could ask you, I know that none of us own crystal balls here, but given the fact that there's been a few months of fighting right now with the markets going up and down in this period, where do you see this likely panning out henceforth, both in terms of the combat and how markets will react over the next few months? I know we don't have a lot to go by given the ebbs and flows of the way the combat has panned out, but what's your take on how the next few months are likely to be?
So I think there are obviously various scenarios. The highest probability scenario in my mind is what prevailed before the war started, which is that once again, Strait of Hormuz becomes a free passageway. It might take a few months for it to become that, but hopefully that is what the world comes back to in a few months. And at that point, my expectation is the oil prices will once again go back towards the 60 to 70 handle that we have seen in the past. So that is the highest probability scenario in my mind. The second scenario is that which is exactly the opposite, which is the war escalates. And if the war escalates, I think it is very likely that there will be some amount of ground action by the US if that were to come to pass. In which case, very frankly, Iran and the island that it owns, where it has a lot of oil facilities, will be the target in my mind. If that were to happen, very low probability, I would put it single-digit probability in terms of percentage, but that is also a probability. And if that were to happen, Iran would ultimately end up losing some of its facilities, the oil facilities. And frankly, that may very well, over time, be quite good for the world economy if it were to happen, because oil prices could go down over time. So those are the two highest probabilities in my mind. Base case which I would put as very high probability would be that we go back to the status quo we had before the war started.
Help us understand now at this point in time who wants and who is desiring for this conflict to end. Is it which side? Is it US? Is it Iran? Because, the world oil like the oil economy around the world is permanently fractured, and as many experts and oil experts have pointed out in the past, Mr. Agarwal, that the impact of this is not going to last like a couple of months but a couple of years. So help us understand that.
Actually, the narrative around how long the impact is, I believe, is not necessarily correct. And the reason is when we had peace, or once there was a ceasefire, you could see how quickly the oil prices came down immediately after the ceasefire. And that tells you that there's enough oil that is available in the world market. And therefore, based on the consumption, there is enough supply of oil, which is what caused the oil prices to come down meaningfully after the ceasefire. And so my expectation is that once we have a more durable ceasefire, then the oil prices should once again come down because these facilities can be repaired relatively quickly than what has been anticipated. And in addition, what we also noticed, which is very interesting, is that the Chinese demand for oil during this whole crisis has come down quite meaningfully. Now, whether that is only a temporary phenomena or is this much more because of the renewable energy that they're putting is an open question. But I would suspect that if the Chinese demand comes down, which is the second biggest user of oil, that would also be another tailwind in terms of oil prices coming down.
Mr. Ashutosh, before we end, can I bring you up on that point that Rajiv was making? Are we reading too much into the long or the perceived long-lasting impact of the ongoing crisis? Do you feel that even if some semblance of combat should resume, our supply chain here in India may not be as impacted as we possibly fear it might be, especially aided by the drop in demand from China? Do you necessarily see there to be some semblance of normality that may continue in the Indian supply chain, Mr. Ashutosh?
Yeah, this Indian supply chain, they have improved. See, after this war, what had happened, that we have resources, diversified sources we have identified, and we are getting oil from there. Now, only question is, what I always say that it's a war between availability and affordability. Now we need affordable oil. I think maybe around $70 to $80 oil we need for sustainable, or so that our oil companies are sustainable. We have got sufficient refining capacities, right? So what I feel, what our other panelists have said, that if China goes down, then there may be a cheaper oil flow to India. As far as oil supply is concerned, we are taking around 50% of oil from Russia now. So that part is now almost covered. Algeria also we are taking from Iran also, we are taking from UAE also. And in recent, one of the news says that earlier we are getting imported from 27 countries, now around 40 countries. So we have diversified our sources. That's a very good point for as far as India is concerned. And the most important part is if it is goes down, then our import bill will be reduced. For what data I have got there, around $10 per barrel if it enhances, our import losses around 1,80,000 lakh crores. So something like that. So it happens. It is good for India if China is going for more green energy. But this impact will not be immediate. It will be seen maybe after 6 months or 1 year, because it is not very easy to what you say that offset the requirement of oil and gas in China. China is also totally import country,
Right.
like 50% oil and gas they are importing.
Right.
So it will be difficult to observe. Yes, there is a possibility.
Right. Thank you so much, Mr. Karnataka and Mr. Agarwal, for joining us today on ET Now and for throwing your insights on, what signals should, the global oil markets and markets look for when this pause is currently ongoing between US and Iran. Thanks again for joining us on ET Now.
Okay. Thank you.
Thank you.
Now, moving on, sources reveal that FCNR deposits have likely crossed $26 billion. Banks continue to see healthy inflows from NRIs aided by attractive dollar deposit rates and RBI swap facility. Akanksha breaks down the details.
That's right. The RBI's special foreign capital measures are seeing a strong response with foreign inflows continuing to gather pace. Well, according to what our sources have told us, FCNRB deposits are likely to have crossed the $26 billion mark, surpassing the amount mobilized under the special FCNRB deposit scheme, which was launched back in 2013. In fact, FCNRB deposits now account for the largest share of the funds mobilized under the RBI's special foreign capital measures. Apart from this, banks are also estimated to have raised another $5 to $6 billion through external commercial borrowings or ECBs and overseas foreign currency borrowings or OFCBs. Now, the strong response is being driven by healthy inflows from non-resident Indians, which is supported by attractive dollar deposit rates and the RBI's FCNRB soft facility. Also, remember, RBI had said on July 20 that banks had mobilized $20.7 billion under the special window as of July 17. Of this, FCNRB deposits accounted for $17.4 billion, while OFCBs stood at $2 billion and ECBs at $1.3 billion. Now remember, RBI's FCNRB soft window remains open till September 30, so there is still room for further mobilization in the coming weeks. So if current estimates hold, the total mobilization under the RBI's special foreign capital measures is now likely to have crossed the $32 billion mark, which of course highlights the strong response from overseas investors and the NRI community.
Right, let's move on then and get you details of Tata Sons FY26 annual report. Now, it's been reported that revenues of the Tata Group companies have in fact been at about $185 billion, growing by about 9.1% through the course of FY26. My colleague Anurag Joshi joins us to break down some of these details.
Tata Sons has released its annual report for the financial year to March 31. According to the annual report, the revenues of Tata Sons grew 9.1% to 42,367 crore rupees in FY26. Profit after tax of the holding company of India's biggest business group grew 21.8% to 31,961 crore. And the board of Tata Sons has recommended a final dividend of 1,10,717 rupees per share, subject to the shareholder approval. Now, if we see the Tata Group as a whole, revenues grew 7.8% to 16,24,030 crore, whereas the Tata Group profit after tax grew 52% to 1,70,525 crores. Revenues for the group is 2 times and profits is 5.4 times their FY20 levels, according to the annual report. The revenues of the Tata Group companies totally are $185 billion, whereas the 26 publicly traded listed firms are valued at $277 billion, according to the report.
And here is an update on the flood situation in Assam. The state continues to grapple with widespread flooding as incessant rains keep several areas inundated. The death toll this season has now risen to 68, while more than 5.24 lakh people remain affected across 5 districts. Charadev continues to be, in fact, the worst hit district, with thousands displaced and normal life severely disrupted. Rescue teams remain on the ground while relief operations are being intensified as authorities closely monitor the evolving situation. Here is our latest report.
Meanwhile, India has added another medal to its tally at the 2026 Commonwealth Games. 23-year-old weightlifter Gyaneshwar Yadav clinched silver in the women's 53-kilogram category, taking India's overall medal count to 6 at the ongoing Games. In fact, Yadav impressed with a successful snatch lift of 82 kgs, 85 kgs and even 88 kgs, staying in medal contentions throughout the competition before finishing just behind Nigeria's Onome Didi, who claimed gold. Well, looks like India's medal tally, the Commonwealth, is ever so strong despite criticisms around India's sporting in general, but Commonwealth seems to be doing well for us.
Absolutely, Jude. And Mirabai Chanu, gave us the reason to smile on this Monday morning, clinching, in fact, that gold medal yet again at the Commonwealth Games. Well, with that's a wrap on this edition of India Tonight. Goodbye from me, Shubhani Gharat and Jude Sanit.